Hello, everybody, and welcome to week 41 of 2025. This is the Build Weekly Roundup. As always, you have Matt Dines here with me today, Cameron Otsuka. Over the last couple of weeks and months, frankly, every episode, Matt really tries to go deep and touch on several different threads of themes that, you see over time. And I think I was mentioning to Matt earlier this week that I feel like some of the topics that we're going to talk about today are kind of that culmination of all those different threads kind of intersecting a little bit here. So uh, I want us to dive kind of straight into it here a little bit, but the three topics we'll talk about. Number one, kind of, is there an equity financing bubble? Have you seen a lot of these types of deals going through recently? I know Matt's going to want to explain a little bit about what's been going on in the last couple of weeks here. Moving on into sovereign lifelines, really, you're seeing the U.S. and other countries uh, having some troubles economically, but also governmentally. If you look at what's going on in France, and then finally ending it all off with what Matt is calling credit fishers. But I think if you've been paying attention to the news, you've seen uh, a few auto lenders and things go under seemingly out of the blue. And so now there's a lot of deep dive into what's going on there. But you know, with all that said, I'm going to hand it over to Matt here. First things first, Matt. Equity financing bubble. To kick us off, we saw OpenAI and AMD pen this deal that I think is really interesting, and I want you to kind of explain a little bit what is it and what makes you think that maybe there is an equity financing bubble, not just in this space, but maybe across other industries as well.
Yep. So this is the story of 2025, I think, in equity markets, right? We've seen multiple deals like this. OpenAI is going to purchase, 6 gigawatts of data center production facility powered by AMD processors, all of that. How are they going to capitalize it? Well, it's going to come through some, share transactions, right? And we've seen other things like this, like to the point of pseudo related parties almost is what this is starting to look more and more like. OpenAI and Oracle, um, OpenAI and NVIDIA. You just go around
NVIDIA
the
Corp.
closed in club, and you could connect all these together, and you start to see a bunch of kind of encircled related parties who are doing stock for stock financing together, operating kind of loosely on top of the bank money complex, but not really, right? Operating like what it amounts to is financing this bubble. I think we can call it that, and I'll get into the implications of what that means. It's financed through the equity capital channel, right? So I think there's historical analogs here, but if we move forward one slide, I think the you know chat blotter prompt that Matt Levine drafted for his Money Stuff blog this week. As always, he's has a way of getting to the point with the English language and the pen in a way that not many people of this generation can. So he'll go down as one of the goats in terms of his blotter that he's cataloging in a world where everybody wants to be a blogger, right? I think his Money Stuff blog will showcase or be looked at in terms of historical review to understand what went on in this era. But you go through to what happened this week. Monday morning, we get the announcement OpenAI and AMD are going to do this uh, acquisition financing deal. That announcement sends the stock up 38% on the open. You go through Matt Levine's chat, you get into what is going on here. And you get into the details. OpenAI wants to buy 6 gigawatts worth of AMD's chips. That'll be $78 billion. How do you want to pay? OpenAI says, I don't know, let's do this in stock. You give me some AMD stock, market will pump on the news. Essentially, you're going to get these AMD chips for free. Everybody kind
Everybody's
of washes
happy
their
indeed.
hands
Yeah.
over the things and leaves happy. What does this result in, though? This is like a trick where you're using, to make this in like a Star Wars analogy or like the sword and the stone, where you're getting into wizardry, right? You're using a financial trick. You tap into it once, like, oh wow, we got great results out of that. Like the more you go to the well, you're going to come to realize this thing wasn't free. And I'll go through like what is the cost. Every time you do this, what you're actually doing is drawing the resources out of the real economy in exchange for overpriced equity. And if you keep running this thing to its conclusion, it ends badly. And I'll go through a financing scheme, the most notable in history, where this strategy is used. But basically, I mean, the way I understand OpenAI, I don't know how deeply, the research goes down. Who owns this thing? How related with the government and existing financial system? What I mean that like bank capital. How integrated is it? It's a private company. It's not exchange traded, but it's by name, an AI model development vehicle trying to bring in this new wave of technology for, the West, specifically America's horse in the race. But really, what it's starting to look more and more like is a capital financing scheme, right? So in its version of this process, these intra-party deals, bespoke deals with, say, Oracle or Nvidia, et cetera, it's operating in the private capacity. It doesn't look public private, or it's not proven yet that it's public private. But then you get into other deals that we're seeing where the US government, the Department of Defense, Department of the Treasury are taking stakes in specific entities, MP Materials, Intel. We can just go on Trilogy Metals this week. I'll go through that chart. I think I have it coming up. Starting to see the Treasury using this same scheme, equity financing, to obtain what it wants. What is the net result of that? It moves stock price up. How does Mr. Market respond? He's going to start trying to front run whatever the Treasury or the private financing vehicles, OpenAIs, et cetera, are going to utilize this technique on next. They're going to start buying, marking public exchanges up. The stock market goes up, but at the end of the day, it's all paper. It's financial, right? Like the way this isn't a bubble is if these entities, whether it's MP Materials getting the rare earths out of the ground, Intel, shipping semiconductors, and feeding that production into the U.S. economy's semiconductor consumption as inputs into other goods, or OpenAI, like dupe firms, do software, products and businesses actually start paying OpenAI in cash for those products and services. That's a yes or no. We won't fully understand or realize the answer for probably 5, 10 years. Like this will take time to fully play out. But the more we do this, the more we tap into this, black magic trick, I'll call it that, the more the costs will pile up. And in the extreme, what you get, like we've seen this technique used by Anglo-Dutch and Western governments before in the past, in times of war, most pressingly, because this is when you need to do this, right? So the South Sea Company, I won't spend 30 minutes on this. I want to get wrapped within 30 minutes, but this vehicle was literally created as a public-private partnership. Ultimately, its reason for being was to consolidate and reduce the cost of the national debt. Like that was its raison d'etre. That's why it existed. Um, in reality, like the way that it was supposed to generate its profits and why, speculators pumped this stock on in London and created a massive speculative bubble. You can research into that, deeper if you wish. Plenty of great resources on this speculative wave. Tied up Isaac Newton, kind of bankrupted him,
Infamously, yeah.
um, infamously. So that's the picture of the stock market kind of euphoria and speculation on the right as this whole thing was forming, right? And that's literally the process we're going through now, like 2025, these deals. It's going to take a long time to play out. But the way that this institution or this company was supposed to actually generate its profits was trading in the South Seas and lands and waters that the Spanish Empire occupied and possessed. So it had little to no probability of actually generating any profit, right? Um, so this monopoly that the king granted it in its charter was essentially worthless, but in a speculation, in a frenzy, the public doesn't care until the checks come
They
due.
just want to try to hop in and
Um,
ride the wave.
but yeah, but eventually, what this company started dealing in was operating and trading of government debt. I think in the extreme, we look at the situation the U.S. Public purse finds itself in right now. Over time, don't be surprised if these vehicles, these entities, whether it's OpenAI and the tech bubble, the AI example, or the MP materials with rare earths, or Intel, or any other where you see these financing schemes showing up where there's no cash component of the transactions. It's all stock based. Don't be surprised if in 5 to 10 years these turn into some vehicles for kind of warehousing the public debt, because that's ultimately what this is all about. So we'll go into the last one. There was another example this week. OpenAI or AMD wasn't even the hottest stock of the week in terms of percentage gains. It was this Trilogy Metals. I think it's actually Canadian listed. But yeah, their stock shot up like 3x, $2 to $6.62, over like in a matter of days. Um, so yeah, this is what's going on. It doesn't mean 2001, the bubble collapse is right around the corner, or the 1720 South Sea bubble collapse is right around the corner. You generally don't know where you are within a bubble exactly, but they end when the last sucker walks by. In the P.T. Barnum phrase, there's a sucker born every minute. He just happened to be walking by my circus, right? It's kind of that when you run out of capital to come in and keep financing these things, that's when they die. So you either have to run out of funders to buy this, and right now I don't see any sign that's going to stop. If that were the case, you wouldn't see these charts like these spikes. AMD up 38%, Trilogy Metals up 300% on the announcement. Once we start seeing these and those results start to not generate the pop, that's your signal that we're running into the end of the distribution phase, and we're getting ready for a drawdown potentially. We also don't know, however, will this AI technology actually deliver the product revenue, the new market growth, um, you know the the economic windfall that it's kind of pitched to deliver and hyped to deliver. So we'll see how this plays out. But using history as a guide in my framework, this is what's going on, and that doesn't mean get out of equities. That doesn't mean sell, because you never know how long. You don't know when the end of the bubble is. What you don't want to do is buy high, sell low. In that Newton example, right? He bought in early, sold at a nice profit, and the chart just runs away from him. He gets the FOMO, he gets greedy,
Yeah.
sees his neighbors making money in this speculative wave, and he rebuys back in at the top, And Newton, despite being one of the most advanced intellectual minds that humanity's ever produced, just gets sucked into it and financial stupidity and gets ruined. Um, so this is a dangerous game we're playing with capital markets. You only play it when you're forced to. And it's the oldest trick in the Anglo-Dutch book, and we're resorting to it now. Um, just to understand where we actually might be in this process. So you look at the public debt situation, look at the public debt to GDP ratio over the course of history, over the United Kingdom's existence. I think this chart goes back to 1600s, right? You see the South Sea bubble on the chart on the left. It's it's your first cyclical wave on a march up in the UK's debt situation, increasingly but slowly worsening over the course of over a century. So even if this current thing we're in with AI, this equity financing scheme that we're seeing materialize as a strategy to deal with the government's increasingly worsening debt problems, we still may be very on in this process in the grand scheme, like in the scheme of centuries, which is how these things play out. The UK's debt problem didn't end until it essentially won victory at the Battle of Waterloo, and I think it was 1815, but 1810s ish, when it finally defeated Napoleon, wrapped that phase up, and then it began to delever. So this thing can go on for a very long time. We're just riding a cycle on top of a cycle. So you never know, but be careful. Uh, I guess that's all we can say about this. But just wanted to give that color. I thought Matt Levine actually nailed it with that cheeky little text message chat thread between OpenAI and AMD he wrote up. I think he was much more right on the point than anybody gives him credit for.
Yep. When I read that, I knew right away that explained it. So, okay, well, so then, now that we're talking about sovereign debt, right? Let's kind
Yep.
of talk more about, we titled this sovereign lifelines. So, we saw, or we've heard of El Salvador potentially getting, I believe it's a swap line, and as of today, Besant wanted to make very clear it's not money. It's
El Salvador got a swap
uh,
line, or do you mean
Argentina.
Argentina?
I'm sorry.
Yeah.
So Argentina, he wanted to be very clear. It is not just free money; it's a swap line, and it does make a difference. But maybe explain a bit here, Matt, from your perspective. Why is this all seemingly happening now? I haven't heard about any specific major news about anything like this in the last 4 or 5 years. But all of a sudden, it seems like there's multiple countries now in pretty bad fiscal situations.
Yeah. So this really is a similar example to financing scheme. Think about it this way. Instead of buying rare earth materials through or rare earth metals through MP materials or trilogy metals or a similar metals and miners producer, or semiconductors when the Treasury buys a 10% equity stake in Intel, or AMD, or list all of the above through these quasi public entities, right? OpenAI is a financing vehicle. You can do the same thing with governance and control of satellite states. And this may be a bit of an overreach by me here, but through dollar diplomacy, right? You look at what you're doing. I listed those three flags: Argentina, Japan, Israel. What you're actually doing with Argentina is the most explicit, right? This is a financing deal executed through the Exchange Stabilization Fund, which is managed by the US Treasury. $20 billion in purchases. It's a swap agreement, right? So it's technically non-cash. This isn't going through the banking system. Both sides will collateralize their end of a trade, US dollars for Argentine pesos. And then the US is coming in on the back end with a bid on Argentina's US dollar denominated debt, which is trading at distressed levels. It literally is picking up a I mean, I don't want to say colony, that's not the right word, but it's a partner state. You're picking up a partner uh, under your kind of strategic umbrella. What does Argentina bring to the table? They lack an educated workforce. They don't offer high value, intellectual type of goods, right? These aren't, you're not going to expect the society to produce,
Not gonna be
semiconductors
the next
or
ASML
design
there. Yeah.
design chips like KLA Corp or similar, right? That's not what you're going to this economy for. What they have though, they have agricultural resources, where the U.S. and U.S. as well as an agricultural producer can now engage with Argentina, which is China's number one supplier of soybeans. And you look at its beef production, a lot of agricultural commodities. Now, instead of the U.S. agricultural sector and the Argentina agricultural sector being used to play against each other as competitors, these two cooperating now, teaming up, can kind of solidify their own agricultural export markets, right? So it's a key Achilles heel for the U.S. So there's that. You've also got some shale resources, energy development resources. And then you've got metals and mining and the kind of the Patagonia, the Andes Mountains, all of that. And obviously, what the U.S. needs, it's with all of these tariffs being applied, the one Achilles heel, what can't the U.S. economy produce, or what do they not have that it most definitely needs for its kind of modern advanced economy to keep humming along? Needs rare earths, right? It needs the minerals, right? And Argentina can be a source of some of those, like through South American development. So essentially, the U.S. is picking up a proxy state. So really, like Argentina was an old, like in the old world, 1500s, 1600s, it was Spanish occupied, right? Still, like as is the rest of Latin America, has those Spanish roots. With the U.S. coming in on this deal, and there is a kind of an Anglo-Dutch kind of back end as well that you can kind of see fuzzily. You're picking up a new partner into the US's orbit with this deal. So I mean, it's really the same playbook as what you're seeing in equity capital markets in the U.S., but
Playing different
it's
words.
executed through the debt markets and derivatives in the kind of nation state context.
Got it. That makes more sense to me. So then, from this perspective, I think Japan makes a lot more sense to me as well. Then I know the new Japanese PM. I'm gonna flip over that slide for you here. Um, you know, Japan's first female prime minister, but I've also read that very she has very close ties or very friendly with maybe some of the ideals that Trump is trying to push for. So I'm kind of curious here. We've already been a close partner with Japan over the past, since the end of World War II. So I'm very curious. Why is this even more of a big deal that she's come to power and Trump's actually reaching out and congratulating her?
Yep. Um, so Japan, just for historical context, we don't have to go deep history, but I'll just go back to 1955. They've had basically single party rule. So they've had a dominant governing structure and hierarchy. It's only really shown bits of weaknesses on two prior occasions in recent history. One was like 1992, 93, and that was coming out of the collapse of the Japanese bubble. We saw the Nikkei bubble collapse, the Japanese real estate bubble collapse, all of that. Then you got the 2008 bubble collapse. So it went through, a challenge to its kind of hegemony within Japanese internal politics and government. right after the 2008 global financial crisis. And then you're also seeing another episode right now with what we just witnessed with the election of their new PM. So the new PM, Takaichi, she's from the LDP, so she's from the classic stalwarts. But what I'm reading is it looks like she's going to have to bring in kind of partners within her cabinet to form a governing coalition. So you see the hold of the post 1955 kind of implementation of the broader global order, like within Japan, which sits inside of this global system. You see that itself starting to go through challenges on, now we're looking at three separate episodes, right? Both each of them like 10 to 20 years, like decades. They sit decades apart, but you're seeing that hold, that stability gradually weaken, right? So that's what we're working towards. um these things eventually fall apart, give them enough time, but they can also hold together for a very long time, bend but don't break until they do. um so in terms of this Japanese PM, she's going to have to bring in some outsiders from the LDP to hold its coalition, similar to what we've been seeing in other countries like G7 politics and in France, Germany, etc. The old coalitions can't hold. They have to kind of broaden the base and fight off the factions that they don't want to win. Choose the right or the left, and then try to hold the center. And eventually, you get into a position where the status quo can't last and things snap very quickly. Is how they tend to work out. But Takaichi's kind of politics, I'm just reading here. Um, she supports revising Article 9 of the Japanese Constitution, which renounces the use of military force. She supports strengthening the US Japan alliance, so she's pro US. Um, she's considered pro Taiwan and a China hawk. Um, that's just reading from her Wikipedia page, first section. So you kind of see who she would be in support of. She's clearly um, among the faction in Japan that supports working with U.S. Um, and taking a hawkish posture against China. So that's kind of what you're looking at, and that's why you look at Trump's reaction to this. Tremendous news. I think that tells you everything you need to know.
Right.
And given what they're looking at in debt markets, don't see, and in the Japanese debt markets, we saw massive activity in the yen. I think like Monday on or Sunday night in the U.S., but Monday's market open. Tokyo's the first one to see sunlight, so they open up trading every week. The yen, and this result of Takaichi was made on Saturday evening in the U.S. our time. So when their markets opened Friday night, yen weakened by 4.5% against the dollar. No, sorry, I would say about 1.5% against the dollar. The Nikkei in Japanese yen terms spiked, is up 4.5%, and that's just a response to her kind of what the market sees as her policy agenda, which is going to be keep front end rates low, let long bond yields slowly rise. But this was the way the market kind of reacted to that: a sell off in the yen, steepening, a bear steepener in the Japanese government bond market, and a spike in Japanese equities is how the market responded. So if there is further pressure on Japan's financial system, don't be surprised if you get a similar support deal from the U.S. and its institutions to backstop this friendly government in Japan.
Got it. And so then, in more surprising news, at least for me, this Israel-Hamas deal. I don't know if you're watching any clips of this, Matt, but there's a clip of, I think it's Pam Bondi speaking, and Trump is sitting next to her, and he gets passed a note from Marco Rubio. So, um, for me, this was not something that I specifically expected soon, right? I know that there's been a lot of conversation, and so I'm kind of curious from your perspective, Matt, how does this tie? How does this kind of jive with these other two, sovereigns that we were just talking about? And why did you place this in that same category.
Yeah. So Israel is, in my framework, Israel sits under the umbrella of this US-led coalition. They're they're a partner, right? They don't need a financial bailout right now, like Argentina or the Japanese government bond market, all of that, the yen, that situation. But they are within the tent, right? So you've seen a shoring up, from Washington, D.C., of each of its, I don't want to, it's probably too far to call them satellite states. You could call them allies, but it's very clear which ally is the strongest relative to, the others inside the tent, and it's the US. It's also very clear with Trump coming in with the America First, like made it very well known, or very, he wasn't hesitant at all to say the quiet power part out loud. Like the US, that era of um, yeah, Obama would describe as leading from behind. That's not the policy of this administration. So US is going to lead from in front. So who's setting the agenda, pulling the orders, all of that. It's very clear what the White House's stance on that is. So Israel within that tent, part of this process, shoring up the stability of the Israeli state, which in this case means working through a situation of war and violence, which is, sadly to say, the status quo of the existence of the um, Jewish settlement of Palestine dating back to, the late 1800s. From the whole existence, it's always been violent. Essentially, it's perpetually existed in a state of violence. I think today's announcement, the shoring up, the ceasefire, it really lines up with the theme of the US injecting stability into each of its partners, like whether it's Argentina, Japan, Israel, you name it. The key allies behind the US and its coalition, we've seen in this week's headline that same theme of, just injecting stability, right? And I don't expect this to be the end of the situation at all. In the broader scheme of human history, specifically talking about what's going on in Israel in our lifetimes, but it may be the end of a short-lived era, starting with October 7th of 2023, right? So I think those were like within the span of three countries, all of them massively important to the broader context of what's going on in markets. The nation state level negotiations, that'll primarily play out through foreign exchange and the dollar, which gives this administration the power and ability to move the dollar in terms of FX markets the direction it wants it to go, up or down, right? Having that ability, there's a right policy or an optimal policy or what's best for your nation state in any given environment. And in a 2025 environment, it's very clear. Trump administration led by Treasury Secretary Bessent on that specific policy um, agenda. He wants the dollar down, right?
Right.
But this thing, what we're talking about in this theme, those three, that'll play out through foreign exchange markets and government bond markets. And then the AMD situation, that equity financing, all of that, that'll play through your stock market cap. But in the big picture, this is what's going on. I think the one thing we can say, this is an environment where what you'd expect from history, you should get a lot of volatility, not just measured, on a daily basis, but like over the course of years. This is where big moves can happen.
So we talked then about, like you're saying, you got equity markets, you've got sovereign market. Let's talk quickly then about the corporate credit market. I think kind
Yep.
of just like you're painting like I think an encompassing view, right, of what's going on across markets. So, to kind of round us out here, explain what happened with First Brands. I know a little bit, but I'm not super deep and well versed on why this was such a out of the blue occurrence. It seems like for so many people.
Yep. So First Brands, it's an American firm. Um, they bought up over the course of the last 10 to 20 years a lot of auto parts manufacturers. they were global in presence. I think their employee base spanned 6 continents. So they're part of global supply chains, manufacturing for, say, an air filter or, tail lights or, whatever. You go into your auto retailer like AutoZone or O'Reilly, those goods that go on the shelves at those retail outlets, those are coming from a kind of a manufacturer and distributor like First Brands, right? So, First Brands wasn't a massive business, but its supply chains and then the flip side of that, it's financing chains kind of spread multinational banking, so cross-border finance, all of that. So that was the business it was in. When the tariffs went into effect, that disrupted this business model heavily. So you've got auto parts tariffs, all of that. Um, and this company, which was basically built up on debt financing, a high degree of leverage to acquire this portfolio of brands under this entity, First Brands. Once the tariffs went into effect, like it became just a matter of time for their particular business, and given how they'd finance themselves, um, to basically implode, right? So if you start looking under the hood, we're just starting to see details of this. Um, how did this company actually like finance its operations, right? You're starting to see problems, like some serious problems showing up where the same collateral was pledged for different, lines of trade finance arrangements. What does that mean? Means First Brands takes an invoice from a customer who has an IOU coming in. They're going to get paid at a certain date. They take those invoices, post them to a capital partner, could be a bank, could be a private credit fund, anybody with dollars to lend it. And essentially what they're doing is they're lending cash against the invoices as collateral. So it's kind of, you could think about it as almost like a secured commercial paper, right? It's short-term financing. It just goes by this, industry term, trade finance. So what it amounts to is your invoice. Let's say it's for $100. These things would get marked up and priced at about $70 interest rate. So essentially, um, First Brands was funding itself through short-term arrangements where it was paying as high as like 30%, in terms of a discount yield against its invoiced revenue. So highly risky, an extremely onerous interest rate. A lot of smart capital realized this was not sustainable for the company and didn't buy the debt. There's a lot of dumb money out there, from money managers who didn't necessarily do the due diligence, and they're on the hook now for losses. So you can read the stories for yourselves, but I think the ones that come to top of the list, and that's in the little bullet points here at the summary from Bloomberg AI, Jefferies, UBS, and Millennium um, look like they're potentially on the hook for over 10 billion in losses. Some of the collateral was pledged multiple times, um, which means recovery rates would be low. Um, there's this firm Rystone, which has some management overlap with the Greensill kind of fiasco that showed up in the kind of the sequence of deals that Credit Suisse was involved in that led to its demise. Back, I'm talking about the late 2010s, early 2020s era. We saw what happened with Credit Suisse, with the government, Swiss government kind of rescue plan, tuck it into UBS. Now you're seeing UBS um, having to own some of these credit losses on a deal that's, from a personnel standpoint, there is some overlap in the financing partners with kind of the same names who were infamously tied in the business deals with Credit Suisse. I think that's all we can say. At this point of this, it's a situation that'll gradually work out. There will be losses. You're seeing some funds um, who had really significant exposures here. Those investors, whoever the capital was behind it, there will be losses. I saw one headline: BlackRock was trying to get out of one of those, like make a redemption request. We'll see how that goes. But this isn't one of those things that just shows up out of nowhere. It was actually the tariffs and the Liberation Day and all of these processes that have been building up over the course of the year. And now the bodies are coming to light. So this is kind of like, I'll bring to mind the quote that describes this as Warren Buffett. In the bull market, everybody's fine. Like, the music's still playing, so there's no rush. Like, we're not going to find out who's left holding the bag, who's going to be left holding the losses. But this quote from Warren Buffett: "You don't find out who's been swimming naked until the tide goes out." Well, the tide's clearly coming out now. Liberation Day was the forcing function to that effect, and now we're starting to see the bodies come to the surface, and this is one of them. You can say the same thing about other kind of credit issuers, ABS originator like Tricolor, for different reasons, but similar Trump administration policies that are driving it. In the case of Tricolor, which was heavily involved in subprime auto lending, loose documentation, loose collateral, tracking. Like in some cases, there was, again, as we saw with First Brands, a problem with um, collateral rehypothecation, pledging the same asset behind multiple credits, and the system not having, like the financial system, the banks lending into it, not doing the due diligence to making sure they had clear title to assets, all of that stuff, and unencumbered claims, no other creditor, all that. Um, Similar effect with the Trump administration putting a forcing function, on that collapse. But in this case, it was the migration policies, or what would you call it? Like just the ICE raids going on, all of that. So you're starting to see, that the financial activities of the 2010s, and then also post-COVID, uh, you know, 21 to 23, 24, bubble era financing, um, coming to a washout. Now, is this the big one? Like all of the bad credit gets rinsed out of the system like a 2008? Maybe not. It may be a touch and go, right? We rinse some of it out, we get rid of some of the bad debt, and then we just turn it back on, and then we run it, to its next endpoint. I'd say it's probably the latter. Like you're not going to see an unwind of all these equity financing, bubble froth, all of that, what I described as black magic, capital markets tricks that are being employed. I don't think we're going to wash it out and, come to religion in 2025, 2026. I'll be skeptical. I think, we're still going to continue on this path. It's just a matter of, um, at the end of the day, and this is kind of sad to say, a lot of the credit comes down to like who holds political power and who's going to support, a specific business franchise, and that's just the nature of today's markets.
Yep, right there with you. I think this is definitely not the first or sorry, this is definitely not the last one of these that we're going to see, but I agree with you. It does not seem like this is a wide scale, reckoning. So I think for our viewers, a lot of interesting threads that Matt was able to pull together today. Again, it really crossed equity markets and credit markets, both at the corporate and the sovereign level. So I think that's a really interesting set of kind of threads that you were able to pull on here today.
Let's wrap it up there.
Yep. Well,
Everybody be careful out there, but have a great weekend.
thanks again for watching, and don't forget to like and subscribe on YouTube, X, LinkedIn, wherever you're seeing this. Have a good week. See you all next week.